Hey guys, welcome back on the channel. In this video I'll show you how you can start making money with UNISWAP by providing liquidity to one of its many pools. As you may know, UNISWAP is the biggest DEX in DeFi. If you don't know what's that all about, probably you want to subscribe to the channel and wait until the end of the video to drop a like if you took value from it. Not right now, but if you take value, hit the like button by the end of it. So I'm going to show you how you can start investing with UNISWAP. If you never heard about yield farming, that's what I am going to show you how to do. And probably you already used Uniswap. Likely you came here on to trade, you did swap some assets. Usually you'll pay a very small fee when swapping those assets, but that fee goes to pay out to liquidity providers, which are the people who deposit liquidity into one or multiple of these liquidity pools available right now. And basically that's how Uniswap operates. People are allowed to deposit liquidity into one or multiple pools, and that itself will allow everyone to come here and trade. As long as there is a liquidity pool for a specific pair of assets, people can trade those. And that's the beauty about it. It's a protocol made by the people for the people. This is the financial revolution, guys. And I'm going to show you how to be part of it in today's video. There will be pools with high risk, others with lower risk, but I'm going to show you how everything works so you can make your own decisions. They are the biggest DEX on Ethereum, and not only that, likely all of these chains that they are available on here on the list, you can choose any of those in order to provide liquidity, and Uniswap will be the biggest, or at least the top 2, top 3 protocol when it comes to having the best liquidity pools that we can yield farm on. So if you want to look for pools in a specific blockchain, let me tell you the ones which are the best when it comes to performance. Ethereum, Base. I would even say go with Base if you never yield farm before, because on Ethereum you pay a lot in gas fees, and gas fees are going to be a cost when you deploy your position in a liquidity pool, even when you claim your rewards. So let me just give you a brief example of what is this by providing liquidity. For example, you see pool here. This is the first pool. Let's talk about it, and this applies to any given pool actually. So whenever there is this trade, this pair of tokens that people can trade in a pool, they will pay a certain fee. In this case, we see that it's a V3 pool, so it's a concentrated liquidity pool, and 0.3%, that is a pool fee tier. So whenever people trade the pair in the pool, they will pay this as sort of a tax for using it, and this specific fee is going to pay to liquidity providers. And if you want to start providing liquidity here, you'll see that it will bring you rewards much higher than whatever traditional finance can offer. So liquidity pools are very profitable, but you cannot go with just any one of these. I would say if you're a complete beginner, start with blue chip pools. Pools that have Bitcoin paired with a stablecoin, pools that have Ethereum paired with a stablecoin, Ethereum paired with Bitcoin. Those are all going to be good options. If you go with pools for meme coins, yes, they can yield high rewards daily. They can get you 10% a day, sometimes even higher. It's not unlikely, but you'll be having the risk to be exposed to a token which likely has a very volatile aspect to it. That's the main difference between high market cap stuff, blue chip stuff like Bitcoin, like Ethereum, that has solid liquidity on it, okay? And also market volatility. As you may know, that's the biggest risk in crypto, in DeFi. So if you hold to the stuff which has more anchorage, so to say, the more solid stuff, the blue chip tokens, you will be more protected in a sense, okay? But all in all, you'll need to have conviction if you want to provide liquidity and yield farm on. So right now we're looking at specific cryptocurrencies. We could filter by networks. Let's filter with Base. Base is an excellent blockchain to provide liquidity. It's a leading layer 2 on Ethereum. If it's not the leading, it's going to happen at some point. It has a ton of volume. The gas fees are fractions of cents. So in those regards, it's much more suitable for investors than Ethereum. And I would tell you, start, for example, on Base just because of that. Likely you'll make some mistakes, and those mistakes will not be costly here on low-cost gas fees blockchains, such is the case as Base is. So right now we're here on pools, right? We're looking at the top pools by TVL. We could sort this out by APR, also by one-day volume, and volume is the main thing that's going to determine how profitable a pool is. Volume to TVL ratio. This is the key, guys. The higher the volume, the better. And if the ratio for volume to TVL is higher, the better even. Because what's going to happen is that this volume, when it's being traded, it gets this fee here, right? And this 0.05% of 65 million is going to be sent, not all of it, but a big chunk of it is going to be sent to liquidity providers, and those make up for $17 million. So depending on how much you are invested in this pool, it will determine how big of the fees that are being generated you are going to get. You can claim your rewards at any point in time. It's as simple as that. You can deposit today, you can claim 1 hour after, a couple hours after, tomorrow. You can claim multiple times a day. It's all up to you, all right? So that's the biggest thing you want to look out for when looking for the best performing pools, volume to TVL ratio. So let's say you want to go with this one, and this one would be a really great pool also to provide liquidity because it has Ethereum, which is the gas fee token for Base. Base, so far, it has not announced or launched any native token. So since it's a Ethereum layer 2, the gas fees here are paid on Ethereum. So Ethereum is a highly traded token in the blockchain. And the stablecoin paired with the native token for gas fees on a given blockchain will always be, if not number one, very close to that. It's not gonna leave the top 3 at any point in time just because it's highly traded. You can see that for the chart here. We see the volume for the past day. It shows us on the top 3 there's 2 pools of the same token pair. And let's see if in the top 10 there's even another. Yeah, there's another. So in the top 10 there's 3 pools of the same token pair. The difference is that, for example, you see this one is on the V2, so it's not going to be concentrated liquidity. You don't have to set ranges, so this is going to be less rewarding because it's less capital efficient, but when it comes to management, it's completely passive. You set it and forget it. And the cool thing about Uniswap also, I should have mentioned it before, Uniswap is a decentralized exchange that have not experienced so far any hacks. So we're talking about a span of several years without hacks in crypto, and that's a big thing. That's why Uniswap is so trusted, and it's the biggest DEX in DeFi. Now, another aspect about these pools, you see this is again a V3 pool, but the fee tier here is 0.01%. So in order for this pool to make up for the same amount of APR that this one, right now the APR is even higher. But that's because there's a lower amounts of TVL here. So in order for you to determine which is the best pool, in my experience, this works out really good. Over time, it performs really well. But you might want to allocate a percentage of your portfolio to this pool. It would be a good idea, and then you could compare for yourself after a month, for example, how it has been, and then you can move your funds accordingly. Have in mind also that you can unlock your tokens from a liquidity pool at any point in time. There's no locking period, so it gives you full freedom to manage your funds however you wish, all right? We also have a good pair here, Ethereum paired with Aero. Aero is a native token of a competitor. Well, it's not really a competitor, but it's a DEX on Base, and it's a big DEX. The main thing about Aero is that it has a different managing system than Uniswap when it comes to the distribution of gas fees. But this token is also a token that has been performing super well and is linked to the success of Base chain. It might do really well in the future. So overall, this also is potentially a great pair for you to provide liquidity on. Another one is USDC paired with CBBTC. Now, I'm not going to go into detail on how a derivative of Bitcoin can be risky or not, but this is issued by Coinbase. And Coinbase doesn't have the most perfect track record when it comes to customer service. I know many people that out of nowhere they got their accounts frozen on Coinbase. I know also a lot of people that never had an issue with Coinbase, but it's always good to know that this is a Bitcoin derivative. It's not real Bitcoin. It's not native Bitcoin. But if you trust on Coinbase, you probably will also trust in this same pair, because look at the TVL, 2.4 million. The daily volume to TVL ratio is crazy, 50% APR for a pair that has Bitcoin in it, or a derivative in the case. It's also a really great opportunity right now. So if you want to go with stuff which is legit, all of this right now that you can see here in the top 10, actually I don't know about Ray, I never did research about it, but all of these right now on the top 10 are super legit, and virtual is also, it's going to be a gamble play because it's AI, it has the whole AI narrative behind it. The same thing here with AIXBT. So they are trending and they have massive volume right now, but in the long run, I would say stick with blue chip stuff, Ethereum with stablecoins, Ethereum with Bitcoin, Bitcoin with Ethereum, Ethereum and Arrow. All of these pools look great, okay? And I do not consider them as high risk. While here with virtual and AIXBT, I would consider them to be more on the risky side because they're very much recent. I don't know what's gonna happen. So have all those things in mind, all right, guys? If you have any questions, let me know in the comments. I'll get back to you. And also, let's explore here more pools because I want to find something that has only stable coins. Stable pair that has, for example, let's see what we can find. Here it is, USDC paired with USDT. Low pool fee tier, but it has a really decent TVL. This is a very solid TVL, over 23 million. The daily volume on these pools that have such low fee tier, it needs to be really high to make up for it. But these are stablecoin pairs, so you won't have an issue with impermanent loss. They are both pegged to the dollar, in this case, also in the case here of USDC.E and USDC. So these are going to be more conservative liquidity pools, but they will also yield you really well in the long term. Personally, I prefer stuff with blue chip assets, but if you are more of a conservative user and you don't even have all that much conviction with holding Ethereum or Bitcoin, you can even go with these pools, which are pegged to the dollar. The only if about these pools is that if the native, or if one of the tokens in it depegs from the dollar, which is not unheard of. It's unlikely, although it can happen, okay? So let's see how you can provide liquidity to a pool. Let's go with this, for example, wrap Bitcoin with USDC. So you need to hold both assets of the pair. And now you also need to decide which range are you going to provide liquidity. So we click here on the button which says add liquidity. You see there's already a fee tier which is recommended. You could choose another. You can see there's definitely 4 different pools for this same pair, wrapped Bitcoin with USDC. They have different TVLs and all of them will work. But usually with this sort of assets, you will see that UNISWAP, they will give you the best suggestion. So go for it if you're a complete beginner. In this case, they're showing you the 0.3%. But anyways, you can go with the recommended here, and then we click on continue. Now it's the part where we are able to set our ranges. So full range will give you the least amount of rewards. You can see providing full range liquidity ensures continuous market participation. You never go out of range across all possible prices, offering simplicity but with potential for higher impermanent loss. Impermanent loss, in my experience, will only be an issue if you are going to hop in and out of pools. If you have conviction, as you should if you're a liquidity provider, this is an alternative to having your tokens just sitting in your wallet, but in here they'll generate you rewards in the shape of fees, right? So likely you will experience impermanent loss mostly if the price of Bitcoin falls. So that's why you don't want to go with very tight ranges, okay? Because what's going to happen is that when Bitcoin falls, all of your percentage of the pool that is made up from USDC is going to be sold for Bitcoin. It's probably best for you to understand here with a fee tier, a custom range assigned. So let's go here. Let's do something like this. Okay, so what you're seeing here, this graph, this is the liquidity distribution graph. This shows us the big mountains here, show us what sort of liquidity distribution we have. So there's a lot of deployed liquidity within the pool for, let me zoom in so you can see better, for this specific price. So what probably happened is that recently the price of Bitcoin went down and now there's a couple of things happening. Either the markets didn't adjust, or the people who are providing liquidity here, they have a really tight range and they do not want to make that range rebalance, because if they do, and if they go back here to 50-50, for example, they will be locking in impermanent loss, okay? Right now, even if they're looking at the screen and they're showing that they're losing due to impermanent loss and they're on the red, it only gets realized if they sell, because if not, when the price bounces back, and notice that I didn't say if, I said when, because I'm a big advocate for Bitcoin. I think the price is going to bounce back up to 100K and even beyond. It's just a matter of time, right? But that's just my opinion. So if I would be having a liquidity pool position here, I would not be selling that to go back down to 90K and realize any sort of loss I might have been experiencing. What I could do, I could just readjust this downside range to be very closely to the 90K price. So you see the bar here, the white line, this is the current price. I could rebalance my position, not meeting the price, but having it slightly above. So if I would have to rebalance my position, this is what I would do. And this applies to any given pool. If the price goes down, I wouldn't necessarily rebalance by having something like this, right? So the price was in something in between this, and then the price dropped. Markets are volatile in crypto, as you may know. If I do this, I'm locking in impermanent loss because I'm selling and readjusting my token ratio to the new price range. But if I do this, nothing of such happens. What's going to happen when the price goes under your downside is now you're holding 100% in Bitcoin, in this specific case of Bitcoin paired with a stablecoin. If the price goes on the upside out of your range, now you're holding 100% USDC because your Bitcoin was sold for USDC. So in order for me to not realize that loss and still start generating fees as soon as price goes up, I would readjust the range as you see here on screen, okay? Because my position would still be worth 100% Bitcoin since we are establishing a new range, yes, but still above from the current price. And also do know that how wide your range is, of course, that impacts your APR. And that's why probably many people are still having their liquidity distributed here, waiting for the Bitcoin price to go back to 100K. Will it happen? I think it will. When will it happen? Well, that's a hard thing to know. It can take a month, a couple of months, it can take a whole year or more. I don't have a crystal ball. But anyways, this is what I wanted to share with you. You could also have the min and max price here to be inputted manually. And once you choose your given price, you just click continue. You see, it only prompts me to input Bitcoin because I selected the price which is above the current price range. If I go with a wider distribution, and now you see the white line is in between my range. If I click continue, now they're asking me Bitcoin and USDC because of that. And depending on how your liquidity is being distributed around the current white line, the current price, that will determine how much Bitcoin and how much USDC you'll have to input in the next step. If you have $1,000, $10,000, and you go with the 50-50 range, so something like this, 3% above, 3% below, it needs to be really the same percentage, otherwise it will mess up the ratios of tokens that you want to deposit. But let's assume this is even 5 on the upside and downside. Now you're going to have $5,000 of Bitcoin and $5,000 of USDC to be deposited, okay? I hope that makes sense. If not, drop a comment, I'll get back to you. So briefly put, this is how you can start using UNISWAP to invest, to generate passive income. If at any point in time you want to see other options, other pools, you can always come here on pool, of course, or explore pools. And then we find the list of the pools that have a ton of different metrics here for you to look for. If you go with the 1-day volume to TVL, this basically shows you the best performing pools. So this one with Celo USDT, this is yielding crazy because of the sheer amount of volume, almost 4 million of volume, and the TVL is not even 30K. So this is a pool that is having a huge amount of profits, okay? Although I'm not sure what's happening here, likely what happened is that this TVL was higher. Someone might, or several people might have taken out a huge amount of funds from here, and that's why we see this volume. But anyways, you can sort things out by a specific blockchain. You can sort things out by the volume for the past 30 days. But the daily volume to TVL gives you the volume to TVL ratio for the past 24 hours only. I would prefer to provide liquidity to stuff long term. I have positions open for years that I only need to rebalance, readjust, and they keep generating me fees. So I always try to find the ones that perform the best in the long run. And again, for the past month, What did I tell you in the beginning of the video? It's Ethereum paired with the stablecoin. This one here is on Arbitrum. You see the little Arbitrum icon here. It shows us that it is a liquidity pool on the Arbitrum network. So this pool is performing super well also. If you don't have a preference for a blockchain, you can actually have all networks sorted out and then figure it out for yourself, which is the best option for you. Arbitrum is also a low-cost gas fees blockchain if you are wondering. Alright guys, this is how you start investing with UNISWAP. If you are a complete beginner, don't start with 1,000, 10,000. I would say start with something lower until you get comfortable with how everything works. I did a video, a couple more than just a video, but I did one specifically designed to show you the main aspects for you to look out for when providing liquidity to V3, to concentrated liquidity pools. I'll leave a link for that down below. Watch it. It will give you a better depth of understanding of how everything works with concentrated liquidity. And you can apply all of that to Uniswap. If you want to join a community of people who are themselves yield farming and that they even provide you with one-on-one training, there's also free courses there. I would highly advise you to check out the Underdog investor group by Crypto Labs. They also have their own YouTube channel. If you want to be a part of that, use my link in the description. It will get you 20% off on your first month. Of course, you can also get back to me in the comments. It's not like my channel has a ton of subscribers and messages that I cannot take 5 minutes out of my day to help you out, okay guys? So thank you for watching. Hit that like button if you took value from the video. Take care, start making money with crypto in 2025, and I'll see you on the next one.